personally, coming from real estate development and being in real estate development, I always ask myself, why do people in real estate development don't see what we Bitcoiners see? And I think there are various reasons. One is the reason that you just mentioned, the reliance and being accustomed to cash flow, and also the low interest rate environment. Because when you look at the interest rates from 2008 until basically November 2021, they were extremely low. And there was a lot of liquidity coming into the market, and a lot of that was funneled into Bitcoin. And that was basically the time frame from 2009 till 2021, when Bitcoin went through its first three bull markets. And real estate investors, I think, they were busy making money with real estate due to monetary debasement that caused people to invest heavily into real estate. And real estate is also used as collateral in the financial system. So banks are, central banks, commercial banks, they're interested in propping up the property market because they themselves and pension funds hold real estate, and they also lend against that real estate. So it's a source of liquidity for the market. And with quantitative easing and also with treasury buybacks, a lot of capital was invested in real estate. But if you think about what Saylor is actually doing, he's doing what real estate investors have been doing anyway, because for a company, you can raise revenues, you can cut costs, or you can leverage your balance sheet. That's like the third level of growth for a company. And that's what real estate investors have been doing all along. And Michael Saylor, when he came on the scene, I was fascinated by his playbook, because it just reminded me of what everybody is doing in the real estate industry anyway. And he was talking about Bitcoin being digital property. And I thought, well, I'm thinking of it as digital real estate. And now that he's laying out his leverage playbook, that really helped me to understand Bitcoin as capital and its ability to function as a store of value for the 21st century and beyond, really, for this digital digital time that we're moving in. So being a real estate developer, being a real estate investor, that really caught my attention. And then I started to think myself, how could we copy basically what Michael Saylor is doing? How could we apply it to an existing real estate portfolio? It's obviously not as easy, because it really depends. I mean, if you fully paid back the debt that was incurred to build properties, you can lay out and play out Saylor's leverage playbook pretty well. But we are a pretty young real estate development company. So the properties that we own, they are actually heavily indebted. And also the company, so the reason why I'm saying that is, if a company owns properties that aren't indebted, you can't refinance those properties. Because the obvious thing that came to my mind when I saw what Michael Saylor was doing, I was like, guys, we need to refinance our existing real estate portfolio, take the additional equity that we can get, and buy Bitcoin. But the problem with that was we weren't able to refinance the properties, also because interest rates rose. Because there's also an interest rate sensitivity with real estate. Saylor is actually able to get cheap money in public markets because he's the CEO of a successful publicly traded company. And for a privately held real estate company, it's not as easy to raise money. And there's also a higher interest rate sensitivity, but that shouldn't discourage anyone from doing it.
Yeah, absolutely. We were talking offline, and it is simple. Like, the rates are a little different. Being a publicly traded company makes it a little different, and raising with other people's money, going to put that to work, buying a property, fixing it up, and then renting it out, refinancing, and pulling all that money back out and giving it back to the partners you have, and those cash flows. I mean, that's infinite return. So people talk about the CAGR of Bitcoin being 50% or 150%, and in real estate, it can be infinite, right? You have no money in a deal, and those cash flows, like you said, you mentioned Gary Cardone's been talking about that too. Grant Cardone, they're starting to kind of see that world where you can have this asset you acquired with none of your own money. You put the work in, you take that, and then you dump that into Bitcoin, and you're multiplying your wealth hand over fist. So it's really incredible. It makes me think of, I think the guy, did you see the guy recently in, I think it's New Jersey. I think they're based in New Jersey maybe, but it's Battery Finance. Andrew Hones, I think, is the CEO. And they were talking about doing lending or putting it on the balance sheet. I can't remember exactly what I saw a clip of it, but did you see that with their?
Yes. Yeah, I saw that. I've met Andrew as well. And what he's basically doing is he's allowing people to refinance their real estate. So let's suggest you own property that's worth 10 million and you have 8 million debt on it, or you took 8 million debt to construct it and then you rented it out and now it's fully leased, and over time it increases in value with monetary debasement, and obviously you pay back the debt over time, and at some point in the future the value of the property and the debt, they will have changed, right? LTV goes down over time as the value of the property increases and the debt is being paid back. So what you can do after a while, you refinance the property and you take on additional debt, and that's the product that they offer. So they offer real estate investors the ability to refinance their real estate properties and buy Bitcoin with that additional capital. And then I think it's being held either by a custodian or in a multi-sig. I'm not aware of the details, but I think it's actually a great product, especially if you can yourself, as the real estate investor, as the landlord, if you take possession of the Bitcoin. So generally speaking, I think with Bitcoin, what I personally like about Bitcoin is its ability to be self-custodied, right? It is being, I think it ties into it being tamper-proof, because no centralized institution can control its supply. So holding Bitcoin and knowing that it cannot be inflated, I think that's the value proposition that I like the most. So if you do want to refinance the properties that you own, make sure that you somehow keep possession of the asset, either through shared custody or legally speaking, right? If you can maintain ownership legally speaking. I think that's very important. And you also mentioned what the Cardone brothers are doing, or what Gary Cardone is doing. I don't know him personally, but I've been following it on Twitter, and I think it's a smart move. If you think about the cash flow that real estate produces, it's very obvious that Bitcoin is a good reservoir for that capital, and that's like the first step, right? So the first step is, I think, acknowledging that Bitcoin is a good place to store the cash flow that your company or an asset that you own produces. It's actually the same for a startup or for any existing company. And I think then the next step is, how do you incorporate Bitcoin into the refinancing of an existing asset? Because that's what Michael Saylor has done so well with a publicly traded company. And now those individuals that own tangible assets like real estate, they can copy the strategy. And another thing that I'm very interested in, that I'm focusing on right now, is the ability to obtain additional capital to buy Bitcoin when receiving financing. And I maybe quickly explain what I mean.
I'm just going to ask you that.
Yeah.
Yeah.
So let's say there's a real estate project and it's going to cost 10 million to construct, and you get financing from the bank, let's say 80%, 8 million, and you bring 2 million, 20% in equity. What you could do, and it's not going to be easy to find a bank that understands why you asked that question, but with time, there will be more banks that understand the value proposition of giving out loans to buy Bitcoin. Ideally, what I would do is, you get 9 million from the bank. So you get an additional million. And with that money, you buy Bitcoin immediately before you start construction, right? So by doing that, you are hedging yourself against multiple scenarios. Number one, you hedge yourself against a world in which people prefer saving in Bitcoin than investing in real estate, because that would mean that the money that sits in real estate right now, because it is used as an investment to hedge against inflation, would flow into Bitcoin over time. So you hedge yourself against that. That is something that a Bitcoiner understands easily. But number two, you hedge yourself against inflation, because over time, as you construct the property, with monetary debasement and with shortages due to geopolitical conflicts that are also often caused by the fiat system, the cost of producing a home, of producing a property goes up. Material goes up, the cost of labor goes up. So by owning Bitcoin, you have an asset in the company that holds and constructs the property that increases in purchasing power over time. Because if you think about it, it takes around 5 years to construct a property on average. And if you think about the halving cycles that you talked about at the beginning in Bitcoin, they take around 4 years. So on average, if you take a 5-year span, Bitcoin you purchased in year 1 will be worth more after year 5. So you hedge yourself against inflation happening within the economy, and also you increase your ability to obtain credit over time. Because Bitcoin in theory is pristine collateral for lending. It is not accepted as such by TradFi yet, but there are some companies in the Bitcoin space that are coming up, and I think they will provide enough liquidity to use Bitcoin to lend against. And that means if you're a real estate development company, you start a project, you obtain extra capital to buy Bitcoin, you hold that Bitcoin long term. Once you finish construction, you can theoretically also lend against your Bitcoin and fund maintenance, or you could actually pay back debt, or you could buy more Bitcoin. But using Bitcoin at the beginning of a project already introduces this new form of capital into a company structure that allows you to maneuver completely differently. And I think this is not just true for real estate development, this is true for any company. I think it's almost not worth initiating a real estate project or starting a company without allocating capital to Bitcoin at the beginning of the venture to be able to maneuver better, because Bitcoin is this pristine capital, it's a great store of value, it's pristine collateral for lending, and it allows you to just move different.
I think it lends into the question, or leads into this hyper Bitcoinization world where we're trying to live in both worlds too. But eventually, I think most of us believe at some point, it might be ways out, but Bitcoin will be it'll be everything, and we won't have some of these other currencies that we're dealing with. So how do you kind of see this, whether it's the taxes or, using the multiple currencies and, fiat versus Bitcoin at the same time?
If you want the answer to that question right there and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.